The question is, how much money do you get to keep when you're selling your home? Or in other words, how much money does it cost in closing costs when you're selling a home? Hi, I am Maciek and I am your realtor. I'm going to give you the quick short answer and then I'm going to go expand. So if you just want to know how much does it cost, I have 4 case studies in front of me and the average on these 4 cases is 7.42%. But really, let's go into depth, because you may not know about all the costs, and really it depends, because the contract that you get on your home, the offer, dictates how much of the closing costs are you going to be responsible for. So let's dive deep about what kind of expenses every seller basically has, and then what is negotiable. Hey, by the way, I just wanted to let you know that if you have a question and you want to book a 30-minute call with me, just click the Calendly link and you can see my schedule and you can click and reserve a spot for 30 minutes. I'd be glad to answer any questions that you have about the real estate market. So first and foremost, the biggest line item you have is actually the commission. So real estate agents take 6% of the commission. That is a typical listing fee. That 6% is based on the sales price of your property. Now, another line item that is a large item is doc stamps on deed, which is basically the seller tax. So in a real estate transaction, there are usually 3 taxes associated with a purchase that requires a loan. And one of the taxes is always there, and that is the doc stamps on deed. That fee is regulated by the state of Florida, so that's not negotiable on the contract on who pays for that. It is a standard fee that the seller will pay. However, honestly, everything is really negotiable. You just never see that. Now, there are also prorations. So prorations basically means that you pay for what you used. And the best example is property taxes. You know, in our county, Sarasota County, we have property taxes that come out in November, and they are billed for the entire year. So they're actually billed in arrears. At the very end of the year, they send you the bill. So if you sell your property half through the year, you have to give the buyer some of your money because you used it from January 1st to June 1st or whatever it was. So this is a tax proration, and property taxes are not the only prorations that you're going to see on your settlement statement. But how much is that? Well, it really depends on what time of year did you sell it. If you sell it at the very beginning of the year, you might actually be getting some prorations, a credit to your bottom line. But because you have prepaid for a whole year and you're selling at the beginning, so the buyer owes you a whole bunch of money. On the other hand, perhaps in December and you have not yet paid property tax, so you would actually have a large debit for almost the entire year. If you sell December 1st and you had not paid your property taxes yet, then you're going to have to give a large credit for the whole first part of the year that you used. With prorations are things like your association dues. If you're in a condo association, a master planned community, or maybe a homeowners association, you do have to pay for your usage of that property. So if you have $100 a month bill and you close on the 15th, then you would give a credit, because you usually pay those in advance. You'd give a credit, so that would cost you some money. And one last item that really is not a typical closing cost, but it does show up on the settlement statement. And this item can be very small or it could be very, very large. It really depends on the condition of your property and the negotiation tactics that your real estate agent used. So that is seller credits. And when we say seller credits, we're basically talking about the cost of repairs that we are going to give to the buyer because we don't want to do the repairs ourselves. There is no usual amount how much it costs. I've seen them as low as $0, and I've seen them as high as $50,000. But it is very much dependent on the condition of your property, the strength of the negotiation going into it, so that's really on you and your realtor. The biggest negotiation point that you have in an offer that comes your way is who selects and pays for title. This is a pretty decent line item on the expense, divided into many line items in one section for your closing. So if you, the seller, are selecting and paying for the title work, Even though the title was done when you bought it and you didn't do anything, it is still required to be done. So if you are the one that's going to be paying for it, you're going to pay, probably another 0.5% to 1% of the purchase price towards that cost. I mean, there's a closing fee of $450 minimum. Usually it's a lot more than that. And then there's the title search, and then there's the municipal lien search, and then there's the actual title insurance, which is insurance that the buyer is going to get for the clean title of this property. So let's go into our 4 examples real quick. I'm going to try to make this as fast as possible and kind of break down and show you what the expenses were and what the average cost was. Okay, now I blacked out everyone's information here, but as you can see, this first one, the cheapest one, $230,000 sales price. And there was obviously the prorations. There was a little bit of a credit, a little bit of a debit. That's a longer conversation. That's because some taxes are paid in advance, some in arrears. Anyway, call me if you have questions. And then we had real estate commissions. As you can see, that was $13,000 in real estate commissions, plus deed tax in the state of Florida. That's the doc stamps on deed. And here we go, $1,610. Flip into the last page, this seller had very few expenses. But then they had another transaction fee, which is very common and normal. And at the end of the day, they did not have a mortgage, but their total expenses, which when you sum everything, is $15,802.91, which accounts for 6.87%. So 6.87% of the purchase price was spent on closing related expenses. Go to the next one. Now this one here was a $399,000 sale. And in this example, the buyer also paid for title. That first example, the buyer paid for title. So this one here, there was a credit of $1,000. That's the first we see. So there was some sort of repairs or something that needed to be done. And then we have our tax prorations. There's a little bit of a debit because this one was sold in June. So there was a half a year of usage already. And then we have our real estate commissions, and we have some random wire transfer fees. And then there is the doc stamps on deed, obviously a large line item, $27.93. Couple small miscellaneous fees, and then obviously the transaction fee. And on this one, the total closing cost was $25,705.53, which accounts to 6.44% of the sales price. Now this next one is another one where the buyer paid for title. So this purchase price was $550,000, and there was a very large credit to the buyer. There was actually a hurricane that came, and unfortunately damage happened, and everyone wanted to close as soon as possible. So instead of making all the repairs, we just threw a credit at them for the actual estimates that we got on these repairs and let the buyer handle everything after that. So the first expense is $77.48. Next is a large proration, and this one is in a community with a homeowners association and a master association. So there's actually 2 associations in here. So they had a little bit higher expenses on some of the prorations and the estoppel fees. So we had some homeowners prorations, so they had prepaid homeowners, and they got a credit for that because they weren't using it for the whole thing. Then obviously a payoff to their bank, and doc stamps on deed, $38.50. That's the tax once again. And then they had their real estate commissions, and then they had the estoppel fees to the homeowners association, which was actually one of the higher ones that I've seen. They also prepaid the quarterly fees to both associations, and then there was a public notary fee and so on. So at the end of the day, they spent $49,448.55, which actually is 8.99%. This is one. But remember, we gave a very, very large credit, $77.4875. When you remove that credit amount, actual closing cost was 7.59%. And lastly, we're going to take a look at one where the for closing costs. So those first 3, the buyers paid for the closing costs. This one here, $649.05 is the purchase price. And we gave a $200 credit, very, very minimal for some small minor repairs. Now we have the tax prorations. Once again, take a look at these title closing fees. So they actually should have been a lot more, but the buyer ended up getting a very small loan. They put down like 33% or something like that. So their actual insured amount for the bank for their title policy was a lot lower. Therefore, the seller ended up paying less fees. This should have been probably about $1,000 more. But anyway, $450, $2,305 for title insurance. Now, as you can tell, it says optional. Let me tell you, it is not optional. If there is a loan involved, it is required. If it's a cash buyer, no smart cash buyer is going to actually not get title insurance. And I do have a personal story about that. I'll tell you about it another time, about how title insurance saved me on a cash purchase I did, and then a lien came out. Anyway, let's keep going here. We have some more search fees, the prop logics, and so on. So here we are. These are the expenses that the seller incurred in getting them clear title. Now we have also real estate commissions. And then let's not forget about our good old state of Florida. They needed the tax on the deed and $45, $46.50 there, and then obviously the transaction fee. So grand total, when I add everything up, $47,982.22, which accounts for 7.39%. So like I said, the average on these four was 7.42%. But whenever I talk to sellers, I'm basically going to say, look, you're going to be at 7 to 9%. How much money do you get to keep? It depends. Depends on your mortgage amount, depends on the negotiations, depends on who pays for title. Honestly, at the end of the day, if you count 7 to 8%, you're probably in the safe zone. Also, cash are going to just have lower expenses. So whenever you're a seller dealing with a cash buyer, just know that you're going to save a little bit of money when it comes to that transaction. Well, listen, I am Maciek. If you have any questions, please let me know. I do have a calendar invite. If you want to set a 30-minute call with me, no problem. Just go to the description, click this Calendly link, and you can book a call with me for 30 minutes. I'll give you a call. We could do it in person if you prefer, but I'm here to answer all your real estate questions and all your real estate needs. My number is 941-888-SOLD.